Good morning, guys. This is again your Prof. Zeus, and I'd like to welcome you to another session of accounting. Now, this time we are going to solve some problems from the Fundamentals of Accounting, Volume 2, Partnership and Corporation 2021 edition, authored by Dr. Patricia Empleo, Professor Lenita Robles, and Professor Christopher Sherman. Okay, or Herman. So I think I asked you to solve some of the exercise or the problems here, right? So let's try to solve the problems, okay? So number one, the first thing that you're going to do is to read first the requirements. So you know what the requirements are, and then you go back to answer then you read the facts or information, okay? So we're going to prepare the journal entries to record the formation of the partnership. Okay, so there are three partners here, the DBM, MGX, and SPV decided to form a partnership. They are engaged in the business of selling computers and related gadgets. DBM contributed cash of 700,000. MGX contributed a house and lot, which he inherited from his grandfather 3 years ago. At the time of inheritance, the property was valued at 1.7 or 1.575 million. For transfer tax purposes, a week before the partnership was formed, several buyers indicated their intention to buy the property for 2,187,500. SPV, a computer science graduate, is to contribute his skills and knowledge into the partnership. They agreed that SPV is to be given 20% share in the partnership profits. Okay, so there are three partners here. The one contributed cash, the other one contributed property or non-cash asset, and the other one contributed the skills or an industrial partner. Okay, let's now record. Now, this is very easy. So number one, so we will now record the contribution. So debit cash for 700,000 and credit DBM Capital for 700,000. Okay, so entry to record. Explanation. Capital contribution of DBM. Okay. Number two, the other partner MGX contributed property. Okay, if it's property, then it is a non-cash asset that was contributed into the partnership. Okay, now what is our rule for non-cash asset contribution? Is it that we are going to record the non-cash asset in the books of the partnership based on the fair market value? Now there are two given figures here. The one is for tax purposes and the other one is the 2.187, no? That is what the fair market value of the property, because when you speak of fair market value, that is the value that is willing, okay, as I said, a seller would sell the property and the buyer would buy the property. So therefore the fair value is the 2.1 million. Okay, so we will now record the contribution of MGX. So debit, land and building. Okay, I know this is not proper because we cannot record as one item land and building. But for the purpose of this problem, let's just make use of the land and building account. But in your financial accounting, you will learn that there should be what it should be recorded separately. Okay, land and building and credit. MGX Capital for 2,187,000. Okay, so this is to record the contribution of capital contribution of MGX. Then number three is an industrial partner. So what did I tell you about industrial partner? We are going to record the contribution of the industrial partner through a memorandum entry. So let us prepare memo entry. Because the partnership did not receive anything at the date of formation. Okay, so we'll now do the memo entry. Okay. SPV was admitted as an industrial partner. Okay, and we'll share profits at 20%. Okay. Now note that the industrial partner will only share in profit. He will not share in any losses, no, of the partnership. Okay, he's not going to take part of loss sharing. Okay, so this is problem number one. So there you have it. So these are the three entries no needed for problem number one. Let's now go to problem number two. Okay, so again, we're asked to give the journal entries, okay, to record the investments of the partners, okay. So JVX and KRX form a partnership on October 1 with the following investments. So JVC contributed cash of 875 and an equipment, while KRX contributed land for has a value of 7875. Okay, agree to divide profit and losses in the ratio of 60:40 and to assume the mortgage payable amounting to 3.5 on the lot invested by KRX. So KRX, he invested 7.8 million, but there is a mortgage, meaning there's an utang. Okay, and this will be assumed by the partnership. If there's an utang, it will be assumed by the partnership. Okay, this will be what? This will be a deduction from the capital contribution of the partner. Okay, let us now record. Okay, let us record muna the contribution of JVX. So he contributed cash, debit cash for 875,000, and then debit equipment for 4,375,000, and credit the capital account JVC capital. Okay, so to record capital contribution of JVC. Okay, so number 2, this is the first entry. Number 2, okay, KRX naman tayo. Kaya lang there is a mortgage or a lien on the property. So debit land for how much? 7,875,000. Credit mortgage payable for how much? 3,500,000. Let me get my calculator, I forgot. And then KRX capital. Okay, so let us now compute 875 plus 4375. So this is 5,250,000. And then the other one, 7,875 minus 3,500,000. So this is 4,375,000. Okay, so to record capital contribution of KRX. Okay, so we have already completed the requirement for the first requirement. Okay. Second requirement, assume that KRX will continue to personally settle the mortgage payable related to the land. Okay, so if KRX will be the one that's personally responsible for the settlement of the mortgage, then we will take out the mortgage payable because it will not be assumed by the partnership. So what will be the entry? Okay, so this is for A. For B, we will have the same entry for JVC, only the land or the contribution of KRX. Okay, we will record this by debiting land for how much? 7,875,000, and crediting your KRX Capital for the same amount, 7875. Okay, so that satisfies the second one. Okay, first entry is the same, the second entry lang. This will be the second entry for requirement letter B. Okay, let us now go to problem number 3. Okay, problem number 3. JPB admits KD as a partner in his business. Accounts in the ledger of JPB on December 31, 2021, immediately before the admission, show the following balances. So these are but there is already an existing business that is being handled by JPB, and then another person came in, so it becomes a partnership. It is agreed for the purposes of establishing JPB's interest, the following adjustment should be made. Now, remember I told you that if there's an existing business, then you have to fairly value first the business, okay, so that it will be fair to both partners concerned. Okay, so we are now going to adjust first the books of JPB, okay, prior to the admission of KDO. Okay, number 1, an allowance for uncreditable accounts of 2% is to be established. So 2% of accounts receivable, 735 times 0.02, so that will be 14,700. Okay, so let us establish the doubtful accounts. Now remember, when you make an entry for doubtful accounts, your journal entry would be what? Debit bad debts expense, right? And credit allowance for doubtful accounts. Okay, but you know for a fact that expenses will decrease, right? Will decrease the equity of the owner. So therefore, instead of saying doubtful bad debts expense, we can say that, or we can already use the capital account, JPB Capital, for 14,700. Okay, so instead of using an expense account, we will be using directly the capital account of the owner. Okay, next. So this is adjustment number 1. B. Merchandise inventory is to be valued at 875. Now, if you look at merchandise inventory, it is valued at 840. So we're going to increase. Now, again, the reason why we are adjusting the books is to be fair to both parties concerned. So there's an increase in the value of inventory by 35. So we will debit inventory, and then JPB Capital, and this is for 35,000. Okay, so this is your debit, and this is our credit. Okay, so letter C. Prepaid expenses of 43,000 and accrued expenses are to be recognized. Okay, so debit prepaid expenses for how much? 43,750. Credit your accrued expenses for how much? 11,550. So 11,550. And then credit your JPB Capital. So 43,750. So 43,750 less 11,550. So there's a net adjustment of 32,200. Okay. So therefore, before we admit, let us try to find out how much is the capital balance of JPB. Since we have effected certain adjustments in the books of accounts of JPB, okay, so there is a beginning balance in the capital of 1,575,000. Then for adjustment A, there was a debit of 14,700. For B, there's a credit of 35,000. And for C, there is a credit of 32,200. So how much is the balance of the account, of the capital account? Plus 35 plus 1575. So this is 1,642,200, and there's a debit of 14,700,000. So therefore the net capital is less 14,700. So this is 1,627,500. So now this is the ending balance of the capital account. Okay? So there's a net increase in the capital account from 1.5 kasi naging 1 million. So how much is the net increase? So there's a net increase of 52,500 in the capital account of JPB. Okay, so adjust and close the book. So we are now going to close the books of JPB because another books for the partnership will be used, no? So therefore, we will close debit accrued expenses for 11,550 pesos. What else? So you have cash. JPB capital for how much? 1,627,500. Okay, and then cash. How much was the cash balance? There was no adjustment. So credit 455,000. What else? Sorry, there's an allowance for doubtful accounts debit. How much? 14,700. Okay, and then cash, and then accounts receivable. So we will debit all the credits and credit all the debits. For how much? 735,000. Credit merchandise inventory. Now remember, there's an adjustment in the merchandise inventory account, right? So how much is inventory now? It's 875. Merchandise inventory. And then what else? Okay, so I think prepaid expenses. There's a prepaid expenses that we have recognized of 43,750. Let us now check if debit is equal to credit. 14,700 plus 11,550 plus 1,627,500. So the total debit is 1,653,750. Well, the total credit is 455 plus 735 plus 875 plus 43,750. Oops, what did we miss? There's an account. Oh, okay, accounts payable. Sorry, accounts payable of. There's an accounts payable of how much? 455. Sorry for that. Or shall we redo? Okay, let's just redo the entry. Sorry for that, guys. Okay. Let us redo the entries. Okay. So closing entries. Sorry for that. Okay, so we will debit all the credit. Okay. So we'll start with accounts payable. For how much? 455,000. Debit allowance for doubtful accounts. How much is the allowance for doubtful accounts? That's 14,700. And then what else? We have the accrued expenses. How much did we recognize as accrued expenses? So 11,550. Okay, and then JPB capital. based on the adjusted balance of 1627 500. 1627 500. Okay, then credit cash. How much is cash? 455,000. Credit accounts receivable for how much? 735,000. And then debit merchandise inventory for how much? 840,000. And then credit the prepaid expenses. How much is prepaid expenses? 43,750. So there should be no problem now. Let us check. So 455 plus 14,007 plus 11,550 plus 1627 500. So this is 2,108,750. I guess it was the same figure we got kanina, no? 455 plus 735 plus 840,000 plus 43,750. Oh, karon may kulang na naman. 85,000. 85,000. Okay, inventory. So, nga pala, this one, we have already revalued this, no? To 875. So, yeah. Okay. So, I think we got it. 455 plus 735 plus 875 plus 43,750. Okay. 2,108,750. So, there you go. Closing. And then, necessary entries in the new set of books. Okay. So, books of the partnership. We are going to recognize the contribution, books of partnership. So we will enter this in the records again, no? So debit cash, 455,000. Debit accounts receivable for 735,000. Debit merchandise inventory for 875,000. Okay, debit prepaid expenses of 43,750. Credit accounts payable $455,000. Credit allowance for doubtful accounts. Yung allowance, sinasama pa rin natin na even sa books of the partnership kasi there is still a possibility that even though these accounts were already recognized as doubtful, malay mo may konsensya pa rin yung mga may utang at magbayad pa rin siya eventually in the future. $1,627,500. Okay, so this is to record capital contribution of JPB. Okay, and then KDO is to invest sufficient cash to obtain 1/3 interest in the partnership. Okay, the partnership will use the new set of books. Okay, so therefore, if the other partner will give sufficient cash for him to be able to get a 1/3 interest, so therefore this is already 2/3, right? So we are now going to find out how much is the total capitalization. Okay, so JPB capital, which is 1,627,500. Okay, divided by 2/3. Okay, So 16275 2. So this is 2. So the total capitalization of the firm is 2,441,250. Okay. So this is the total capitalization. We deduct the JPB capital of 1,627,500. So therefore, how much is the remaining? 1,627,500. 813,750. So this is now the capital that will have to be invested by KDO. Tama? Okay. So debit cash for 813,750 and credit KDO capital for 813,750. Okay, so this is requirement B. Okay, that's problem number 3. Now let us go to problem number 4. Okay, so we're given here the financial statements of ITV. So necessary to adjust, record the investment of ITV and YSL in the new partnership books and prepare the financial position. Okay, so the statement of financial position of ITV Company, a single proprietorship on December 1, 2021, shown on the following page. On this date, ITV Co., the owner, admits YSL and the latter is to invest cash to give them a capital credit equal to 1/4 of ITV Co.'s capital after giving effect to the adjustments on the following items. So again, we have to first adjust the books. Okay, so merchandise inventory is to be valued at 612. If you look at merchandise inventory, it's 560, right? So 560 less 612,005. So there's a net increase in the value of the inventory in the amount of 52,500. Okay, let us now do the entry. Debit merchandise inventory. Ba't tayo nag-adjust? Para fair sa lahat, no? Because like in this case, there's an increase in the value of the inventory. If we will not adjust, then the gain will be shared by the two partners when in fact it is owned by only one partner. So he should be the one to benefit from the increase in the value. That's 52,500. And credit the capital, ITV Co. capital for how much? 52,500. Okay. So this is adjustment letter A. Adjustment letter B is accounts receivable is estimated to be 95% collectible. 95%. Okay, let us see how much is 95%. So 1,680 times 0.95. So the carrying value of the accounts receivable is should be 1,596, but here it's 1,610. So we have to recognize additional allowance of 14,000. So debit ITV Co. capital for how much? 14,000. And credit allowance for doubtful accounts. $14,000. Okay. And then the third one, convertible amounts of property and equipment is estimated at 280. Okay, but the property and equipment here is 385. So there's what? A decrease. So 385 minus 280,000. So that's 105. So debit. So we have to decrease the ITV Co capital for how much? 105. And credit accumulated depreciation for 105. Quantity account, parang tayo mamali. Mamali na naman tayo. So merchandise inventory, then allowance. Oops, kakaproblema aking pen. allowance for doubtful accounts, and then accumulated depreciation. Okay, let us now plot the entries by the balances. So merchandise inventory has a debit of 560,000 pesos. Allowance for doubtful accounts has a credit balance of 70,000. And then accumulated depreciation has a credit balance of 35,000 pesos. And then we plot the adjustments. So 52,500. And then allowance for doubtful accounts is a credit of 14,000. And then there's a credit of 105. So therefore, let us now get the adjusted balances of the accounts. So 560 plus 52,005. Okay, that's 612,500. And then this is 84,000. And then this one is 140,000. Okay, so those are the balances of the accounts that we have adjusted. Sandali, meron pa pala. Si ITV Co-Capital. So first, there's a debt credit balance of 2,205,000. So 2,205,000. And then we credited that for 52,500. We debited it for 14,000. And again, another debit for 105,000. So therefore, how much is the balance? That's going to be 2,205,000 plus 52,005. So this is 2,257,500. Okay, and then debit is 14 plus 105, 119,000. So therefore, there is the balance of 2,257,500 is 2,138,000. So this is now the capital balance of ITV Co. Okay. So we had done with the requirement 1 or requirement A. This is A. B. Prepare the entries to record the investments in the new partnership. So books of the partnership. Okay. Ay, sorry. Close pala muna natin. So closing entries. So we will now close. Okay. We will debit all the credits and credit all the debits. Okay, so let's start with cash. So credit cash for 630,000. So you have debit and then credit. 630,000. Okay, accounts receivable. Accounts receivable for 1,680,000. Okay. And then we have the allowance for doubtful accounts. Allowance for doubtful accounts, magkano allowance natin? 84,000. Okay. And then merchandise inventory. For how much? 560. Merchandise inventory is 612. And then we have property and equipment. For how much? 420,000. And then accumulated depreciation. You have to close it first. So how much is accumulated? 140,000. And then what else? Okay, so we are now going to debit accounts payable. All the credits will be debited. Accounts payable for how much? 980. Okay. And then debit the ITV Co-Capital. Let us first check if we have okay, 612, 84,140. Okay. So JTV capital is 2,138,500. Let us check the debits and credits before we enter this in the books of the partnership. Plus 140,000 plus 980,000 2,138,500. So this is 3,342,500. And then the other one, 630 plus 1,680 plus 6,125 plus 420,000. So this is 3,342,500. Okay, so we have already closed the accounts of the books of accounts of ITV and company. So we're now going to record our investment in the partnership books. Okay, so books of the partnership. So we have debit and credit. Okay, so therefore we will debit cash for, again, 630,000. We will debit accounts receivable for how much? 1,680,000. Okay, and then we will credit allowance for doubtful accounts. Kasama pa rin yung allowance, ha? So for the depreciation, tinatanggal na natin, no? Kasi hindi mo na pwedeng ibalik yung nakaraan, yung mga nawalang value ng property. Ito kasi baka sakaling makolekta pa. Okay? So how much is the allowance for doubtful accounts or uncollectible accounts? How much is it? 84,000. Okay, 84,000. Okay, and then you have the merchandise inventory. How much is the merchandise inventory? There's an 600 to 500. So 612 500. Okay. And then property, plant and equipment. No, property, plant and equipment, we will record this net, no? Property, plant and equipment. If you have the itemized portion for this, like magkano property, magkano plant, magkano equipment, then you can record that separately, in separate account. So magkano yung remaining balance ng ating equipment? So 420,000 minus accumulated of 140. So 280,000. So 280,000. So hindi na natin isasama yung allowance, yung accumulated depreciation. Okay? As if brand new siya ibinigay sa company. Okay, so allowance and then accounts payable. Magkano accounts payable natin? 980,000. And then ITV co capital. For how much? How much is the balance of ITV co? 2,138,500. Okay, so this should be okay. So that's 630,000 plus 680 plus 612,500 plus 280,000. Is it the same? Oops, nawala. Wait lang, tingnan natin before we proceed any further. 84. Oh, yung 140. What is it, 140 again? Wala na siya talaga. Okay. And then, okay, I think we're okay. 3,202,500. And then this one, 84,000 plus 980,000 plus 2,138,500. Okay, so this is 3,202,500. Okay, so we are balanced. Debit is equal to credit. Okay. And then anong sabi dyan? Is to invest for capital credit of 1/4. So if 1/4, then this is what, 3/4, right? So let us now compute the computation of investment. YSL, investment. Okay, so we have the ATV co capital adjusted, as adjusted for how much? This is 2,138,500. Okay, and then so this is divided by 3/4. So how much is the total capital? So total capital of the company of the firm would be, okay, 2,138,500 times 4 divided by 3. Ang tagal malabas. 2,841,333. And then 2,138,500. How much? 2,138,500. So we will contribute 833. Let us just wait lang. Okay, ba't nagkaganon? Okay, okay. Let us recompute. Okay. So, ITV co-capital. So, this is 2,138,500. And this is 3/4, right? Hold on. Okay, so if we divide this by 4, that is 534,625. Ito pala yung kanyang investment. No? So, debit ka ng cash. 534,625. Credit ka na. Sino to? Who was admitted? YSL. Capital for 534,625. Okay. Hold on. I'm trying to check I'm trying to check the investment. 2,138,500. Okay. Tagal naman investment. 3 divided by 475. So 2,138,500 9.75. Hold on. This is 3/4, right? I think this one is correct, no? Because this is 3/4, so 75. So if we divide this by 75, 2,138,500 divided by 0.75, so that's 2,851. I think this is the correct answer. This one, 712,833. Okay, so yeah, there you have it. You will prepare the statement of financial position. So what is the name of the company? Oh, wala nakalagay. So, lagyan lang natin yung partnership name. ITV Co. Partnership. Walang nakalagay kung anong bagong name ng company, no? So, you have the statement of financial position. As of when is this? December 1. So December 1. 2021. Okay? So, ito yung consider natin. No? So, you have current assets. Among the current assets, you have cash of how much? This is 630,000. You have accounts receivable of 1,680,000. Less the allowance for doubtful accounts. How much is the allowance for doubtful accounts? 84,000. So 1,680 less 84,000. So this is 1,596,000. And then merchandise inventory. How much is the merchandise inventory? 612,500. Okay. What else do we have here? So you have total current assets of how much? So we're done with this, and with this one. Okay. So much. Oops, sorry. Yes, invested in that. Sorry, forgot this one. So 630 plus 712,833. So this is 1,342,833. Sorry for that. I again forgot. So how much is this? Plus 1596 plus 6125. So this is total current assets of 3,551,333. Okay, and then you have the non-current assets. You have property, plant and equipment. For how much? 280,000. And so therefore total assets is okay plus 280,000. So that is 3,831,333. Then we have liabilities and shareholder and partners equity, liabilities and partners equity. So what are the liabilities? Isa lang naman yata, accounts payable. $980,000. Okay, so this is also the total liabilities. No? Wala namang ibang naka-record sa total liabilities. And then we have the partners equity. And the ITVCO capital. For how much? 2,138,500 and YSL capital for 712,833. So how much is total partners equity? Init ito. So therefore, sorry for that guys. Kasi nasa dito, it's what? 5 o'clock in the morning. And partners equity. So therefore, how much is this? It's 980,000. 3,831,333. 31333. Okay, so there you have it. So this is now the third requirement, which is a statement of financial position. Okay. Okay, medyo mahaba yung isa. The last one, I guess. I guess that's the last one, no? Okay. So I think guys, mukhang extensively na-solve naman natin na lahat, no? So I'm leaving the last part to you. Please solve this one. So the required journal entries and then the entries in the partnership books. And then if you can also prepare the statement of financial position, okay, for this. Now what will happen is there are two different entities here and they decided to form a partnership. Okay. So adjust first the books of accounts of both entities concerned and then compute for the capital contribution of the partners because sabi dito, it is equated 40-60. Okay, 40-60 ang kanilang profit ratio. So sabi dito, the new capital of the partnership is based on adjusted capital balances of JLC and RBG may either withdraw or contribute additional cash in order to make the partnership capital balance proportionate to their profit and loss ratio. So after adjusting, one will have to, if there's a need for them to infuse additional capital or withdraw the capital, okay, para maging 40-60 yung kanilang capital ratio. Kaya kinakailangan i-adjust nyo muna yung kanilang capital ratio. Okay, so we will solve this in the next video. Okay, and also please itong mga wala na pala. So ito lang, no? So konti lang naman yung mga problems. Okay, so that's it for now guys. I'm leaving this one to you guys. We will discuss this the solution to this one next meeting. Okay, thank you very much and stay safe. And again, this has been your Prof. Zeus. If you think of, if you have friends who are taking accounting, partnership and corporation, you may want to suggest to them this YouTube channel, okay? So that we can help them in the little way we can. Okay, thank you very much guys and happy morning. Bye.